What if I told you there's a precious metal that's hit an 11-year high, trading around $1,400 an ounce, yet most investors and the big banks like Goldman Sachs, Morgan Stanley, and even JP Morgan are completely ignoring it? While everyone's chasing gold at $3,400 and silver at nearly $40, platinum just broke out of a 3-year slump, and the fundamentals behind this move are incredible. Hello everyone, I'm Eric Roach here from Summit Metals, and today we're doing a deep dive into what might be the most undervalued precious metal opportunity in the market right now. But before we get started, if you find value in these market insights, please hit the like button, drop a comment below with your thoughts and insights, and make sure you're subscribed to the channel with the notifications turned on. And we're still giving away, even this week, our 5-ounce silver starter pack to one lucky subscriber who likes the video and leaves a comment. We'll announce the winner in next week's video, so make sure you're participating. Now, before we continue, I need to mention this video is for educational purposes only and does not constitute financial advice. Always do your own research and consult with qualified professionals before making any investment decisions. Let's start with what's actually happening in the platinum market right now, because the numbers are telling a story that most people aren't paying attention to. Platinum started in 2025 at around $910 per ounce. Today it's trading around $1,400. That's a gain of almost 50% in just 7 months. But here's what makes this move different from your typical precious metals rally. This isn't speculation driving prices higher. This is fundamental supply and demand economics playing out in real time, and the data from the World Platinum Investment Council tells a story that should have every serious precious metals investor taking notice. In the first quarter of 2025 alone, platinum demand surged 10% year over year to 2.27 million ounces. But here's the kicker. Investment demand didn't just grow, it exploded by over 300%, jumping from 113,000 ounces to 361,000 ounces. That's institutional money and smart investors recognizing what's happening before the crowd catches on. Meanwhile, supply fell 25% to just 1.46 million ounces. This was the lowest quarterly production since the second quarter of 2020. When demand is surging and supply is contracting, you get the kind of price action we're seeing right now. Now, let's talk about why platinum supply is in such trouble, because this is where the story gets really interesting. About 73% of the world's platinum comes from South Africa. And if you've been following global news, you know South Africa has been dealing with some serious infrastructure challenges. We're talking about power grid instability, flooding that's disrupted mining operations, and aging infrastructure that's been decades in the making. In the first quarter alone, South African platinum output dropped 10% year on year. That's a massive decline from the world's largest producer. But here's where it gets even more compelling. The other major platinum producer, Russia. And thanks to sanctions stemming from the conflict in Ukraine, Russian platinum isn't just making its way into Western markets. So you've got supply constraints from the two largest producers in the world happening simultaneously. The World Platinum Investment Council is forecasting a deficit of 966,000 ounces for 2025. That follows a 992,000 ounce shortfall in 2024. But here's what really caught my attention. They're projecting that these deficits will persist through at least 2029, averaging 727,000 ounces annually. That's 9% of average demand that simply won't be met by new production. Think about that for a moment. We're talking about a temporary supply disruption. We're looking at structural deficits that could last for years. And historically, when you have sustained supply deficits in any commodity market, prices have to rise to balance the equation. But supply is only half the story. What's really exciting about platinum right now is what's happening on the demand side, particularly in industrial applications. Platinum isn't just a store of value like gold, it's a critical industrial metal with applications that are absolutely essential to modern technology. Let's start with the automotive sector. Now, you might think that with the push towards electric vehicles, automotive demand for platinum would be declining. But here's what's actually happening. Recent policy changes, including the elimination of EV subsidies and penalties for vehicles that don't meet fuel economy standards, are causing automakers to reconsider their strategies. We're seeing car makers stockpile platinum in anticipation of a potential shift back toward internal combustion engines and hybrid vehicles. And if the green energy transition doesn't happen as quickly as projected, we could see sustained automotive demand for platinum. But here's the real game changer. It's the hydrogen economy. This is where platinum's future gets really exciting. Platinum is essential for both hydrogen fuel cells and electrolyzers used in green hydrogen production. The World Platinum Investment Council forecasts that hydrogen-related platinum demand could reach over 600,000 ounces by 2030, potentially accounting for 11% of total platinum demand. We're talking about a completely new demand sector that didn't exist 5 years ago, and it's projected to grow exponentially. Countries around the world are investing billions in hydrogen infrastructure, and platinum, this platinum, is at the heart of that technology. Now, here's where things get even more interesting from an investment perspective. While everyone's been focused on gold breaking new highs and silver's impressive run, platinum has been quietly setting up what could be the trade of the decade. Historically, platinum is traded at a premium to gold. For most of the past several decades, platinum was more expensive per ounce than gold. Today, platinum is trading at roughly 42% of gold's price. Let me put that in perspective. You can buy platinum for less than half the price of gold, despite being roughly 30 times more rare. This price relationship is completely out of whack with historical norms. Even if platinum just returned to parity with gold, not a premium, just parity, we're looking at potential upside of over 130% from our current levels. Let's talk about how platinum stacks up against gold and silver as an investment, because I think this is where the comparison really highlights why platinum deserves a place in your precious metals portfolio. Platinum, on the other hand, gives you the best of both worlds. It has the investment characteristics of a precious metal. It's rare. It's durable. It's been valued for thousands of years, but it also has critical industrial applications that are growing, not shrinking. And unlike gold and silver, platinum is trading well below its historical averages relative to other precious metals. The volatility in platinum can actually work in your favor if you're buying at these levels. Yes, platinum can be more volatile than gold, but that volatility works both ways. When platinum moves, it tends to move big. And right now, all the fundamentals are pointing in the same direction. Now let's talk about why physical platinum makes sense in this environment, especially compared to paper alternatives like ETFs or mining stocks. When you own physical platinum, you own the actual metal. You're not dependent on the performance of a mining company. You're not subject to counterparty risk from an ETF. And you're not exposed to the operational challenges that can affect platinum miners. Physical platinum also gives you optionality. If the hydrogen economy takes off faster than expected, If the automotive demand surges due to policy changes, if supply disruptions worsen, you benefit directly from higher platinum prices without the additional risks that come with paper, alternatives, or the futures markets. The forms of physical platinum that make the most sense for investors are coins and bars from reputable mints. American Platinum Eagles, for example, are backed by the U.S. Mint and are easily recognizable and liquid. Australian Platinum Kookaburras offer beautiful designs and are produced by the Perth Mint, one of the most respected mints in the world. So the question becomes, is now the right time for you to consider platinum? Based on everything we've discussed, I think the timing is compelling. We're still in the early stages of this supply deficit cycle. Investment demand is just starting to pick up, and the hydrogen economy is moving from concept to reality. The risk, of course, is that economic conditions deteriorate and industrial demand falls. But even in that scenario, platinum's status as a precious metal provides some downside protection. And given how undervalued platinum is relative to gold and silver, there's a significant catch-up potential even in a challenging economic environment. Look, I can't predict short-term price movements, and platinum will always be more volatile than gold. But when I look at the fundamental picture, I see an opportunity that doesn't come around very often. If you're interested in learning more about platinum or exploring physical platinum options, check out summitmetals.com. We carry American Platinum Eagles, Platinum Kookaburras, and Platinum Bars from reputable refiners. Don't forget to like this video if you found it helpful, subscribe to the channel for more precious metals insights, and leave a comment below. You might win that 5-ounce silver starter pack we're giving away. And speaking of winning, congratulations to Westerer 7. You are the lucky winner of last week's giveaway. Send us an email over at sales@summitmetals.com to claim your silver. Thank you everyone for tuning in as we've talked about platinum like in this bar. Remember, this is educational content only and not financial advice. Do your own research, understand the risk, and never invest more than you can afford to lose. Thanks for watching. I'll see you in the next video. Happy stacking.